Today I want to talk to you about the impact of interest rates in the real estate market. This is a huge topic going on right now, so let's dig into it. My name is Coon with Powerhouse Real Estate, and interest rates have taken such a front row seat as far as news topics are concerned in 2024 and back in 2023. It was such a hot topic. So today I want to talk to you about the impact that has on your real estate purchase and sale, and what the true numbers are, and maybe some options that you have moving forward if you're considering moving this year. Consider that you're buying a home for $600,000 and putting 5% down on the home. If you're looking at an interest rate of 7%, which is what our rates are currently today, then your monthly payment is going to be around $4,200. So that monthly payment is a tough pill to swallow. If we're looking at a 6% rate, so just a 1% decrease, then we're looking at $3,800. So that's almost a $400 difference, not changing the purchase price, not changing your down payment, simply the interest rate changing. One thing I want you to consider is the price of waiting. If you're waiting to purchase a home and you're waiting for those rates to drop, it's totally understandable. But if you can afford to move right now, then the cost of waiting might be too much. So I want you to consider the same scenario, except the price of that $600,000 home has now increased to $630,000 because you waited and the prices went up. You're still putting 5% down on this home, and now with a 7% rate, your payment is $4,400. So it has increased $200 from when the prices were $600,000. So that's something to consider as well as you are looking at, should you buy this year or next year? That's only a 5% increase, which is a very normal increase in our real estate market year to year. And so it's very likely that homes that are selling for $600,000 this year are going to be selling for $630,000 next year. It's also very likely that our rates won't drop significantly in that time. And so there's a good chance you'll be paying more and have the same rate this time next year. A few unknowns about interest rates that might help you make a decision also are, our rates right now, like I said, are hovering around 7%. We've gotten down to about 6.5% in the last couple of months. We peaked last year at a little above 8%. So rates right now are looking pretty level as far as the year goes. We're seeing them stay pretty consistent. We do anticipate that later this year we may see some decreases, but with rate decreases, we expect price increases at the same time. So purchasing now at a higher rate will give you the opportunity to buy at the lower price and refinance later. Otherwise, you can buy at the lower rate, but your prices may be inflated. One thing that you might not know is that you can't lock in your interest rate until you're under contract. There are a few ways around this, but for the most part, most lenders won't allow you to lock in your rate until you have a contract and it's accepted. So what this means for you is we could start the process today for buying a home and rates are at 7%, but maybe by the time we're under contract, they've gone up or down. And so this is something that we as real estate agents will work closely with your lender to make sure that throughout the process, you're still in your affordable range, that rates haven't jumped up a whole percent and now you can no longer afford what we've been looking for. And so we can stay in contact with you. It also allows us to keep you informed and let you know rates have dropped. So we really need to put the hammer down and start looking very seriously so that you can capture that lower rate. And you'll have an advantage in that moment because you've already been through the process, where a lot of buyers that jump in when the rates drop miss that opportunity because by the time they find a home, they've gone back up. Another thing that might be a surprise to you is that interest rates change every day. They're not always a significant change one way or the other, but they do change every single day, and those rates are reported to us every day. So it is something that has a lot of variables as we get into the process because, like I said, you could be starting the process now, but that rate could change significantly by the time you nail down a property. Just a couple more quick things about interest rates. Your interest rate is really determined by the loan program that you choose, the down payment that you bring, and your credit score. All of those things will play into the factor. You might look online and see what interest rates are, or even as I report, interest rates are about 7% right now. you could easily get a 6.5% interest rate just by choosing a loan program that allows that, and you have a really great credit score and you're bringing money to the table. The lower the risk is to the lender, the lower rate you're going to get. And so all of those things play into factor, and you end up with a rate that's personal to you and your circumstances. So while you may see rates advertised, that's not always the rate that's going to be given to you specifically. A big topic that has come up as interest rates have gone up are rate buydowns. Rate buydowns are the opportunity that you have to pay a little more at closing to buy your interest rate down. So you may pay $5,000 to get a 0.5% lower. You have to look at your specific situation and decide if it's worth it long term. If that 0.5% monthly savings is going to ever repay the $5,000 that you put down up front. It might not be worth it if you're planning to stay for a short time in the home, but if you are planning to stay long term, then over the life of the loan, that could make a significant difference. And the last thing I want to cover as far as interest rates is refinancing. Refinancing is also a huge topic right now when it comes to interest rates. You might hear a lot of agents say, buy now and refinance later, and I mentioned it earlier in this video. Refinancing is the opportunity that you have to change the terms of your loan. So as you purchase your home and you lock in your rate, you lock in the terms, then you have the opportunity at any point to go back and refinance those terms, which means you could get a totally different rate. It will change your monthly payment. You will have to put some money down. It does usually cost a couple $1,000s to refinance. And you do also have to have some equity in the home. You can't refinance if your home value has stayed stagnant. So there's a few terms that wouldn't allow you to refinance, but for the most part, you should have the opportunity to refinance into a lower rate. And a lot of lenders right now are also offering free refinances for the first couple of years of owning a home, just to help buyers out, because we know that interest rates are such a hot topic and they're really deterring buyers from jumping into the market and choosing to purchase now. So in order to alleviate some of that stress, a lot of lenders have given this opportunity to purchase now, and if rates drop in the next couple of years, you have the opportunity to quickly refinance and not pay anything up front to do so that you can lock in a lower rate as the rates tend to drop. So if you have any questions about interest rates, I'm happy to answer them or connect you with a great lender in our area. My name is Megan Coon with Powerhouse Real Estate.